Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, February 7th, 2023. It is 11:30 a.m. Eastern Time as I'm starting the video, and I'm going to do just a quick update on the equity markets and some of the other trade ideas that I've highlighted recently. All right, so let's start out here with the equity markets. So far, when it doesn't make a trend, but as I suspect it's going to be a bit of a grind going forward, so that kind of puts me to more of an active trader mode, kind of take the quick profits on the first targets, play a bounce, that kind of thing. In other words, we'll probably be, I suspect, somewhat range bound for a little while here while the market digests the gains. As far as the recent short from Friday on the Qs, we're getting close to the trend line. That's still the minimum and initial downside target. That's this uptrend line right here. That is not a line tool, but this is. So that's the uptrend line off the lows. I'll show it to you on NQ. We did hit that recent reaction high. You have the gap right there. Gap softened or backfilled. In the bullish case would have a backfill the gap with us going on. But again, even should we push up one more and make a marginal new high, meaning a relatively minor high over that previous high, that's going to give us divergence here on the 60-minute chart of QQQ. We already had some on one of the indicators on the future. So again, to me, the upside is limited at this point. I feel comfortable with swing shorts, but I also go into active trading mode and play bounces and get on the 1-minute charts, and that kind of stuff is really you have to do that on your own. You can't get that active trading stuff out there because those charts change so fast. You get little bounces, and again, if the trading range compresses, as I suspect it will, as volatility abates here, then you're looking for smaller and smaller micro swings. These are the bigger swings, big drop, big rallies up. Now, keep in mind that I'm going to get to the VIX in a second. The VIX is testing the top of that wedge and could pop. So, if that happens and boom, volatility explodes, we could have a leg down that could come out of nowhere. So I'll get to that in 1 second. But as of now, I just wanted to say that's it. I still favor a move down to this trend line. Suspect sooner than later. Probably not make a new high. I think we'll hit the trend line soon. Even though the Qs are up today, maybe then put in that marginal new high, the divergent high, but we'll see. So far you can see that's a line I've had on this chart for a while here. That was back from February 1st. I put that line on. Actually created back on the 19th, tweaked it, did something, maybe it turned the number on February 1st, and you can see it's support, and that's about 30, just under the 303 level. And so once that goes, then we should have a jog down to tag the trend line and maybe cover and reverse and play a bounce if the charts confirm. You want to look at NQ as well. This is the NASDAQ 100 futures. There's the trend line right here, same trend line, nice, well defined. Just calling for another tag of that. There's some support there as well. And again, if we already had some divergence here on the RSI at that high. That's a divergent high 3, 1, 2, 3. A little correction, a little bit bigger correction. And should we, not hit the trend line now, should we go up, make a marginal new high like I showed you on QQQ, it's going to give you the divergence here as well on the PPO and RSI. So again, I believe that the upside right now is limited. There are no guarantees, but that's my outlook. And again, probably be choppy, erratic, kind of back and forth, frustrate typical swing traders, and the more active, nimble swing traders, day traders, in and out in a day, 2 days, a few hours. Those might be the better strategy right now for the equity markets. But bigger picture, well, let me look at SPY, and then we'll go to VIX, and I'll move on to some other updates like natural gas and stuff. There's SPY, 60-minute chart. Remember the big picture is this. You have these uptrend lines on SPY right here and on QQQ, which I just showed you on the 60-minute chart. You can see it as well on the daily if you look at it there. It's this white line. And, if those break, coupled with the posture of the VIX, let's not forget, this is old Mr. VIX, the VIX Volatility Index. There's our primary uptrend line right here, or at least our uptrend line off the mid 20 421 lows right there. We held that support recently, and the VIX continues to push up against this downtrend line. The more tags you have, you have the initial tags up there and then multiple tags here, and recently we've been pop hitting that, and it's this positive, aka bullish divergence, that tells me that most likely this wedge is going to break out sooner than later, and we'll get a trend change. And the only time the VIX does this, I mean, the VIX can go up. It's up today, and the market's up today. Both the S&P and the Nasdaq 100, and the VIX is up. So it's not that it can't go up, but it's not going to have a big move unless the market goes down. Each of these big pops in the VIX coincided with the big legs down in the bear market. So again, this should this break out and then QQQ and NQ and SPY break those downtrend lines, we could see a quick swoon down. So the thing is, just don't become complacent. Right now, like I said, favoring a little kind of grind around for a little while, but I'm ready to move and engage the market aggressively should I see that, if it tells me to. As far as trade ideas, besides the fade of the QQQ short, which so far is working since Friday, that high, they faded it pretty good. What is that so far on Friday's high? Fade of about about right at 3.5%, almost exactly, from Friday's high to the recent lows. But I still, one of the better ones, if you want to fade the tech rally, is Tesla. Just today, I actually took a little starter short in that. I mentioned this one as one of the nicer looking shorts. That it was also one of my favorites right here. It's a long. We took most, but not all that. At least I did, and highlighted that as a trade idea. But that's pretty big resistance right there. You can see we have a lot of reactions. We have the primary uptrend line off the lows, which is a target, and then this minor uptrend line right there, which is just starting to crack today, but not impulsively. So there's two ways that I take a short trade. I either short a rally into resistance that I think will cap that rally, and or on a breakdown. So I'm waiting to see just a little bit more evidence, and then I may take that to a full position, just a half or a starter position right now. And even a minimum targets that pull back to that uptrend line, that's a 10% drop. So I'll take that all day long. Just below that is a 167.50 support, good support level, which I could also see being hit easily. And then on the daily chart, as I've covered many times, we have a nice big old resistance zone here. We're at the bottom of that resistance zone. So, if Tesla wants to pop up a little more, and there you can see the same trend lines I just showed you on the 60-minute here on the daily. The primary uptrend line off the lows right there, which is a target, and then the minor trend line that forms that little wedge on the 60-minute chart. And I'll easily allow it up here at about 208, maybe even add another lot, although I really, to be honest with you, I'd prefer to see the breakdown here. I might just hold on a half position and wait till the trend line solidly gives way, whether we push up there or not. So either way, I like that one as a short trade if you want an individual stock, that is. And then I mentioned some others. Again, some others that I was long recently. Disney was one I threw out here for you on the within the bullish falling wedge. It's one of my favorites, and rode that one up too. Also got out, I don't think a little early in hindsight, but where I wanted to, what I was targeting there. And that one just broke down, and so that one I still think we have some downside to come. Look at the bearish PPO crossover on the daily chart. Clean separation in the PPO, just like you had clean separation there and a crossover, and then you had that big drop. You didn't stop until you were all the way down here, and then that ended with that bullish crossover right there last time here. Bearish, high level bearish PPO crossover right there, and that would have got you short for that. So anywho, could be more, quite a bit more than just a little pullback, but I'm looking for maybe a back test of this trend line right here, and or that 101 target right there was, well, target on the upside, now target on the downside. And that's swing trading, folks. Swing the trends up, swing the trends down, especially if I am right. We're looking at a market that could grind around for a month or more, in a relative range, within a 10% up and down range, 5% up, 5% down, somewhere along those lines. All right, let me give you updates on everyone, the crowd favorite. Well, the crowd's not so favorite recently. A lot feedback on this natural gas trade, but that's me. I'll stay with the trade. Get stopped out, and I gave that one some room too. The second one, and it looked breakout looked imminent. Now we have a breakout. So as long as this sticks, now what's happening today? If you followed that post, and I highly encourage, if you're interested in any trade ideas, even things covered in the video, quite often I go back in under that post and I'll post an update. And I gave you the futures chart. I'm going to get to that in 1 second. But so what I said in this morning in the initial post is, yeah, there's the breakout, and it's clearly a breakout. It's not an all-in moment until we get a solid close above there, because this is a daily time frame, and this is a downtrend line I'm using on the daily. So to confirm it would be a solid close above there, as well as a bullish crossover on the PPO. It's close, but not yet. Look at that. You can see down there it's turning up, and I put good odds it's going to happen, and I'll tell you when it'll probably happen. That's what I followed up in the comment section below that post this morning, and that was this NG. Nope, that's NQ. I need to find NG, my natural gas chart. These guys are going to roll soon, but I'm still on the March here. This is the March contract, and although we have the downtrend line in UNG taken out on this is 2-hour candlesticks, so you're looking at each candle's 120 minutes instead of a daily candle, and that's the downtrend line I have on the March futures. Remember, UNG is kind of a it'll start to roll. It probably has the next month out already rolled into it. May still have some Marches. I don't think it does a hard roll. I think a soft roll. So it's not any one or the other, and that's why the trend lines don't always match up. And that's also why over time, UNG is a ETN. It has costs and expenses to roll. Might suffer from contango or other issues, rolling futures and all this stuff. But this is the what needs to happen. That's what I said in that post this morning right here. That's 2.602. That's price resistance right there. You can see all these little reactions here. I'll zoom in. You probably can't see on the video. I'm seeing it because I'm looking at this monitor here. Okay, there you go. So you have all this support. It might even be in my line might now just leave it there. We'll call it 260. All right, let's just make it simple, and that's what I said today. And then the downtrend line, they come in together. So we broke out of this minor downtrend line. We need to pop that, and we pop that. That should, I believe, be that match the catalyst for the short covering rally, and should send us up quick. If that level pops, I would suspect probably a quick rip, double digits at minimum. You can see that's my first target there, and then these are the targets I laid out in that post as well. Again, it's in the comment section on the first one, but maybe reaction there. We could just blow through that first target, but I favor a move up here to at least that 303 level, 303-ish, and quite possibly more. Remember, on the daily chart, you go back out to the daily chart and you look at UNG, and then just go back in time and look at see, you had a rejection here. It looked like the lines were going to cross, but they didn't. They came up. Here, I'll show you what I'm talking about. PPO lines right there. Looked like we're going to have a bullish cross. Got rejected, but this was the bullish cross right here. It came, and it might not look like much to you there, but I have to turn off all my lines to measure it. But that was a rally of about 32, 33%, maybe even more than that if I got it right up to the high. Yeah, 32. And so you can see this recently looked like we were going to get it as well, and that's why I was postured and put it out as a setup, but we never took out the trend line. We're taking out the trend line now, but we haven't made the bullish cross. That's just additional confirmation. So like I said, daily, solid daily close today or tomorrow if today's breakout fails, or next week if today's breakout fails, and this would just increase the odds further. Especially that once you've been below for a while like this, been below, had a little turn up, never crossed, and that's what happened right here. And again, 32% happened right there, and I'll measure that for you. That was from low to high. Before all said and done, natural gas rallied 76%. So that's one of many, and I put up the that position size calculator. I created that years ago. obviously I think people are not using that because natural gas is one of many trades it should be in a portfolio. Whether I swing trading, trend trading, it's just like investing. It's diversification, asset allocation, position sizing, and what I call beta adjusting your position size. In other words, UNG is not the same as SPY or Disney. Whereas if whatever your number is, whether it's 10,000, whether it's 100,000 in a stock in a portfolio that's worth millions, or you're $1,000, you're just getting going and trading. If your average position on SPY or Disney is 10 grand, then you want to put maybe 2 grand in natural gas. Why, Sam? Why am I going to bother with 2 grand? Well, if it's the trade pans out, you're going to have anywhere from a 20 to 40% gain. You trade SPY, especially in this market now, you're probably looking, maybe on a swing trade, 5-7%, maybe 10, maybe even less, depending on how active you are. So it puts the same dollar amount in your pocket, but then don't forget the loss. You can't trade natural gas or any volatile, Tesla, anything like that, with 2% stops, 1% stops. You're just going to get stopped out in the daily noise, the grind, the volatility. So any risk and reward go hand in hand. If you're targeting 20 or 40% on a trade, then you can allow yourself a 10 to 5, 10, 20% whatever loss. Kind of in line. Is at least a 2-to-1 risk reward ratio. And then over time it'll pan out. Just take your shots and don't get married to a trade if it doesn't. So that's that. Enough on that one. Let's move on to crude oil. Crude oil, I just took profits. Told you that one. I liked that yesterday. Coming off the divergent low right here. That was on the 15-minute chart. I believe I shared it with you right there. And actually reversed it right here just before the video. More of a shot here. I'll show you the 60-minute. We're close enough at resistance. I'm going to keep tight stops. Again, it's just an active trading thing. I think there's going to be more upside, but this is the 15-minute I showed you. And there's a trend line, but it shows better on the 60-minute. That's why I just had that up. That's what I was looking at here. Oops, no, I want a 1 month. Let's do a 1 month hourly candles. There it is. This downtrend line right here, and then resistance right above it. And so I think what's going to happen, I had a price resistance here right there at 76.90. We have a downtrend line that I think we popped it, but I believe that's going to be a rejection and coming to back test that trend line, and maybe set up a new trend line like this and then continue on up. So again, that's just a quick fade trade for me. But I want to say that's a good place to book profits or raise stops if you think there's more. Remember, the bigger picture on crude, it wasn't just that 15-minute chart. It was also the primary uptrend line, or the this very significant uptrend line on USO, the crude ETN. This is the most actively traded crude ETN, I believe. It's the one I usually use. It's a good proxy. It does a good job of tracking crude oil prices. And there it is. There was a right top trend line support, and a bull trend. Buy pullbacks. This is trading 101. In a bullish trend, until proven otherwise. That's still a larger bull trend. It's been in correction mode recently. But lately, if you can see, so this is kind of the bigger trend, let's say the long-term trend. This is the intermediate trend, right? Coming from off that high, making lower lows and lower highs, right? But then near-term trend right now, well, first of all, there's a pullback to the long-term trend line. You can't get much better than that. And then in the very near term now, this is a near-term uptrend so far. Early stuff. But if we can go on and pop this, the downtrend line on the top of the triangle, and then take out this high, it's going to, reaffirm or give additional validation or confirm that we're in that near-term uptrend, and ultimately that could morph into a intermediate term uptrend within the longer-term bullish uptrend. Okay, so I know that confuses people. Sometimes I speak on not only speak and provide analysis on multiple time frames, but I trade on multiple time frames, and I know I get the feedback. Randy, I thought you were bullish on gold. Why are you short gold right now? Well, okay, I'm longer term bullish, but looking for near term pullback, that kind of stuff. Oh yeah, let's look at that real quick. GLD, like I told you, it's kind of like meh, a little bit in no man's land. Other than that trend line that hit yesterday, I did point that out, and I also pointed out that GDX hit the first target, and I expected, probably get a reaction there, but not much, no more than up to here, right there. And so I view any bounce, ideally up to that 31 level, and or the top of the gap is an objective re-entry if you covered yesterday, or add on if you want to add on for a swing down to that second target down there, which is a short target. Remember, these are the long targets. T1 hit here, T2, T3, still have T4 where I think we're going ultimately, but just looking for a trade of correction, and then the next leg up in the metals and miners. Today's bounce in gold, like I said, you can blindfold me, not let me look at the charts of gold or silver, and I can usually trade it pretty successfully just trading this chart, the Euro US dollar pair. Daily chart, negative divergence, i.e. divergent high, kind of a little blow off candle there. That green pop faded hard. Was on Fed day, ECB day, or one of the two or both. Fed was, ECB came day after the Fed. Bearish rising wedge, breakdown, still headed, I believe, to here. Nothing goes down forever or straight down. Usually there's zigzags along the way, and the zigzags can usually be identified on the shorter term chart. So on the 60-minute chart of Euro US dollar, we were just looking at the daily, you've got a little, I'm not crazy about that downtrend line because there's not a lot of reactions. You do have some divergence, but I think we'll probably zigzag. I think this is a little head fake. People want to buy the euro because it's been going up, just like the stock market. It's a FOMO trade. And so at most, see that purple line, that's probably at most. So if we do head up a little, the purple line and the downtrend line, dual resistance levels. So should the euro carry up a little higher, that's pretty good resistance, and this is where I think it's a hard short re-entry into gold, silver, GDX, if it and or if you want to trade the euro pure, which is also a short on the dollar, that's a max bounce target. And then we may or may not get there. We could just peter out and head on down here. Like I said, that's kind of micro analysis. You get down to the shorter term charts, and then you need to define your time frame, and do you have the skill sets and the time and the knowledge. If you're working a job and you're doing this here and there, checking in, don't try to actively zigzag trade all the zigs and zags and the minor bounces. Set your price target, and set your, I use OCO orders especially. I highly recommend those for those that don't do this full time. OCO means one cancels the other, or sometimes some brokers call them OCA, one cancels another, and it's very simple. You buy, or let's say in this case you short the euro, then you short it there. On the breakdown, you say I'm going to put a stop here, and I'm going to put a price target here, and or whatever your stop is. Maybe it's right closer and tighter into the wedge, and you set them good to cancel. So your stop loss order there, if you're wrong and this thing starts to rally and go up, then you get stopped out. You don't have to be in front of your PC or phone to do it. It'll trigger automatically, and then it's going to cancel the other order. So, or if your price target's hit, it will then cover that short position. And or if you want to set it to reverse, certain brokers, that's why I love interactive brokers. You can use a single order. If I'm trading, whatever it is, let's say XYZ, and I have 100 shares short, and I want to cover and reverse there, I put a buy to cover order, or just a buy order. You don't even have to do buy to cover. That's annoying too. Other brokers force you to either sell something when you're long or sell short. Interactive brokers, it's just buy or sell. Those are the only buttons. Other than, of course, got to put your order type, market, limit. And so if you do a you're short, you just sell 100, and then if you put an order to buy 200 there, it's going to buy 200 shares, which will know to automatically cover the 100 short, and then in one single execution buy you another 100 long. And that's when I often talk about reversing. That's what I'm doing when I say reversing a trade, short to long or long to short. And then okay, so that's gold, silver. Remember GDX first target, little reaction here so far, but like I said, upside I think is probably limited before the next leg down. I still favor T2, whether we bounce much or not. And then crypto, I've was bullish in crypto back here when I was bullish the equity markets at the lows. Said crypto won't only rally, but it'll rally more because that's what it does. And the gain. And this is just it's not Bitcoin itself. It's that first to market ETF type instrument, sells at a premier discount. 73% rally, and all along I've said it'll rally until the stock market doesn't rally. It goes up and down. It's a risk on, risk off trade. It has been forever. Peaked right when the stock when the risk on Nasdaq 100 peaked. I mean, almost perfectly. Remember, the S&P 500, more of a risk off or more diversified index. Nasdaq is known as the risk on index. All 50% tech stocks. They both peaked in November. That was their high, and they both bottomed here. Well, the Q's actually went to Q bottom, and technically right there in October, but a near double bottom there in the beginning of the year. So, anywho, in crypto, just you could mirror the stock market, but again, it's just a higher beta thing, meaning if you're going to get a 20% rally as we did, or almost 20 in the Nasdaq, then you got a 70% in Bitcoin. But now, just like the market's getting a little frothy, and again, you can blindfold me and go long crypto. When the major trends in the market, the 10+% moves, it's going to rally, and then when stocks, if and when they go down. So the takeaway is, if the VIX explodes to the upside, if the equity indexes smash through those trend lines and then carry down below other supports, in other words, it's not just a brief whipsaw, then you're going to see a lot of hot air come out of the crypto market. But right now it's still a risk on FOMO trades. You got to kind of take it a little. Just can't go aggressive right now on those shorts, and you don't have a hard buy. Let me just show you some levels to watch. I do have some levels to show you right here. GBTC, I like it as a short here because I also being short the equity markets. Divergent high on the 60-minute chart. That's negative divergence. Price support right there, a pretty decent support level at 1184 right there. I'm gonna move the line down just a hair so I can set an alert that doesn't pop too soon, and that'll kind of give me heads up on GBTC. And you can see probably at least come in and back test this trend line down here. That would be, I'm just gonna measure it for you. If and when hit, roughly an 8.5% drop, and it could be a lot more. Again, it depends on what the stock market does. So I'll get you the crypto in 1 second. Let me just show you the other big one. ETHE, still pushing that downtrend line, the primary downtrend line. But again, when the market's bottomed right in the beginning of the year, to be bullish and long, especially tech, the risk on. Remember, the rally in the market, it wasn't just a stock market rally like we've had before with the S&P. It was a almost exclusively big tech money going back into those fangs, and that's the king of risk on. And so therefore Ethereum popped this bullish falling wedge and rallied 86%, at least ETHE. Again, this thing, just like GBTC, can trade at a premium or a discount, so it doesn't do a perfect job, but a pretty good job. And again, a lot of you don't want, I don't blame you, I don't have a Coinbase account or any of these crypto brokers. I personally, I like to trade the futures. You have Ethereum and Bitcoin futures that trade on the CBOE, so that one, or CME, those are a little more secure. And that's that. So we're at downtrend line resistance, and look, if the stock market, if there is a major bottom put in, maybe crypto does break out and continue to run, but it's probably not going to run too far. I can tell you it's not going to run too far unless the stock market resumes and powers the next leg up and clearly puts the 200 days and the downtrend lines in the rearview mirror. So until then, crypto is likely, you can see Ethereum rejected at the downtrend line, big support right here about $7. Move back below that. Let me just color that line up for future reference and also set a price alert there, and that would probably be send it down quite a bit. Also coming off that little bearish rising wedge right there, just like the stock market got a little ahead of itself. Rising wedge. I'm having a hard time with my line tool today, like I usually do. It's just screen draw software. You click on the right tool and it doesn't take. You have to double click or keep clicking. Anywho, there it is. That's kind of bouncing around like the stock market wants to pick a direction. Stock market goes up, it's going to go up. Stock market goes down. I'm talking about the next major trend, not the next 2-3%. Then Ethereum goes down. All right, last but not least, I already covered the VIX. Yeah, I did, didn't I? Here's the VIX right here. Just a different charting platform than the one I've been showing. I just have, this is 2-hour candlesticks. Right there is your primary downtrend line. You can see I have a price alert. Really, the VIX, it's also price resistance about 20, and that also comes in the downtrend line. So we're very close. We can pop it, or, like I like to say, resistance is resistance until and unless broken. Oh, hold on, let me just get that chart so you guys can see the whole thing. There we go. Okay, there it is. So there's your high right there. Resistance, resistance. And so we're either going to get rejected here, have another move down, and it's not outright bearish. We could still work our way down within the wedge, or we could break out any day now. So that's the key. It's maybe a little more grinding around. Maybe we pop, and if we pop, if for example, here's why I cover so many charts and why I talk so long in these videos. If we pop the VIX, that's not an all-in in the market. Maybe the VIX pops and breaks out, but then at the very same time, QQQ or S&P, the S&P 500 SPY, they fall to and bounce off their trend line, or maybe even QQQ breaks that, and everyone thinks the market's going down because the Qs break their uptrend line. But at the very same point in time, SPY, who has a lower, which has a lower trend line, the S&P 500, comes back to its trend line. Here, I'll show it to you on the daily. And then that's what holds the market, or we hit the next trend line. There's the one off the lows. That's the one I just drew on the 60-minute chart. So this is why I look at multiple charts, multiple time frames, and it's simple. You break that, that's going to be bearish. Probably send you down here. Break that, that's even going to be more bearish. Bulls again want to buy pullbacks to these support levels. Bears want to wait to see those go to short or add to shorts. All right, so that's about it. Just watching the VIX, watching the NASDAQ 100, the S&P, of course, always watching the markets. But as of now, like I said, kind of in that little bit more active trading mode. Also, not engaging any one thing super aggressively right now, because other than nat gas, push that a little harder. If we can just take out that those levels I showed you earlier today, just above current levels right here, that 260, and I think, I don't have an alert set. Let me just make sure I have an alert. There it is. And that's it. I'll give you an update if I see anything else that stands out. And what I'm going to do, and I have been doing, I'm starting to put together a short list of individual stock trade ideas, both longs and shorts. When I say short list, just trying to cull out the list, and then I'm going to pass along some individual trade ideas on both individual stocks and individual sector or sector ETFs, because I think that's going to be the key if I'm correct, and we're going to kind of grind around here. If the broad markets are likely to grind around for a while, then you want to be long the most bullish sectors or most bullish stocks, and or short the most bearish, and that should give you some alpha, allow you to outperform the indexes with individual security selection. All right, this has been Randy Finney with Right Side of the Chart. Have a great day.